Be greedy when others are fearful. This is a very popular Warren Buffett quote that's quoted all the time, but is often forgotten. So, what happens when great companies fall and their stock prices tumble from all-time highs? I think it's warranted for us to take a closer look and see if there's an opportunity to invest. So, one such company is Celsius. It is definitely a big laggard in my portfolio, down 12% now. So it's not a large position, but I'm still looking at it and seeing if it's a good entry price now to add a lot more value into it. So let's take a look. So if you were to buy now, you'd be buying at the same price as it was 3 years ago, June 2021. It completely surpassed all fundamentals and just went straight up. So I did trade in and out of this stock a few years ago and made some profit, but that was before I turned to a long-term mindset of investing. Nowadays, I'm more about just buying and not really selling unless I absolutely have to, and if the company's fundamental changes. So we are now in a very violent downtrend that doesn't seem to have found a bottom. And that's okay, because right now there's a lot of tax loss harvesting going on. It's the end of the year. There's just going to be even more selling pressure, more options plays that benefit towards the downside. And there's just no support here. And it's very hard to gauge what's going to happen next, especially with as much... it's very hard to know what's going to happen next, especially with lower optimism and just investors not wanting to be near this stock. So you always have to remember that market moves are always dramatic. If things go up, they go up way past what they should be. And if they go down, they always go down way lower than they should be. So you always have to keep that in mind with these stocks. And it could mean that it goes down further. We'll just have to see. One thing important to note is that Celsius appeals to a large women customer base, which is really unique in the energy drink business because Monster and Red Bull, they're predominantly male customers. So Celsius definitely has an edge in that, and they're increasing market share, and they are increasing international market share. So right now the market cap is at 6 billion. Pepsi bought them for 550 million for 8.5% 2 years ago. That means that they paid to buy this company at 6.47 billion market cap. So now we are significantly below that by $500 million. So this is an important aspect in this company because we know that these large behemoth companies want to take more share into these companies and also help them succeed because these are their growth areas. Their main businesses may not be growing as well, so they have to invest into these higher growth companies to boost their top line. So I'm just speculating here, but since we are below what they paid for in 2022, we can't rule out a possibility of buyouts or increasing their share in this company. Recently, the news from Pepsi has damaged Celsius by an insane amount. Pepsi apparently just bought too much inventory of Celsius, and they basically have to sell those first before they can purchase more from Celsius. So this is hurting Celsius's top line a tremendous amount. Their growth rate has decreased so much, and there's just so much worries about Celsius. But we have to think in terms of Pepsi. Are they going to buy them out? Are they going to increase their share in this company? If you were in Pepsi's shoes, what would you be doing? Obviously, we still see Celsius as a very strong contender in the energy drink business. So right now, they're not going anywhere. People say that Celsius doesn't have a moat, but I argue it does. It has such a strong customer base, and it's just been growing. So a recent very good news from Celsius is their global expansion, their international market share increase. So now they're in Canada, the UK, Ireland, Australia, New Zealand, France, and there's going to be plenty more coming. So their numbers are very good. I think year over year or quarter over quarter, they're up 37% in just international business. And they're just getting started. So obviously right now the US is not doing good because of the Pepsi situation. But overall, they are still a growth company and they've just hit a slump. So when you're investing into these companies, you have to think 1, 2, 3, 10 years ahead, whatever your time frame is. For me, it's until retirement. I'm going to be holding these companies until retirement. So as long as these are fundamentally great companies that are growing constantly and executing well, performing well, then I have no problem entering them. So another big move that they did was acquiring Big Beverages. So this helps them control their own supply and their R&D. So they have more control over supply chain issues, and this should help them optimize their production. So the numbers were not good, and that's not surprising. The last few quarters have not been good because of the whole Pepsi situation, because of the stock price just climbing and taking away future gains from this company. It's not surprising at all. What we have to try to predict is how are the next few years going to be? How are the next few quarters going to be? And I think that they have a turnaround story and the stock price may lag because of increased pessimism in this stock. So my prediction is by this time next year, we should be seeing 20 to 30% revenue increases, including the international markets exposure. So in my opinion, the stock price is not going to change dramatically unless there's some really great news like Pepsi buying them out or increasing their percentage share in this company. Although I do think a buyout is not the best outcome for Celsius because of how much growth potential that they have, it's still one of the options, and it's something that can secure a bottom for this company. So to also play devil's advocate here, we also have to remember that companies are not perfect. Maybe Pepsi did make a mistake in buying Celsius, in supporting them, and they don't grow very much for the next 10, 20 years. But I'm also willing to bet that Celsius is going to do just fine. So we'll just have to see in regards to that. So something Celsius boasts in this earnings report is that even with the slumps, even with poor energy drink consumption, they're still doing better than their opponents in retail sales. So this is just a silver lining to all that's going on. It's not going to affect the share price, but it's just something to understand and keep in mind. So will I be buying a huge share of this company? No. I'm going to buy one share here and there, just not really trying to time the bottom, and try to pick up shares where I think it's reasonable and continue to watch this company, continue to watch the fundamentals, see if things improve for them, and see how especially Pepsi reacts to everything that's going to happen in the next year. So I definitely don't want to be a conspiracy theorist and say, oh, Pepsi knew this was going to happen. They're just trying to get the price lower on Celsius so they can buy more. But they definitely need to improve their optimization of their inventory. It's such a simple oversight that could have been easily addressed. Pepsi's excuse is, oh, we overlooked the demand for Celsius and we made a mistake. And while that can happen, this dramatic of a move is really interesting. So we just have to see what happens. If you learned something, if you disagree with me, if you agree with me, please let me know. Please like and subscribe, and I'll see you guys next time. Bye.